Okay, guys, considering that we are in a spot, a point, and we are preparing our financial statement. And at that point, we have, let's say, inventory, which is our main item we are aimed to sell within ordinary course of business. So inventory is short-term asset. Why? Because at the preparation of financial statement date, I have an intention to use, sell, or convert into the cash. If any of that terms is met, in that case, the asset is short-term. Again, if you have an intention to use, to sell, or to convert into the cash the item into the to convert the item into the cash, in that case, the asset is considered as short-term for point A, regardless of the name of the asset. If you have an intention, the main point is intention. For example, I have bought that telephone for selling purposes. In that case, telephone is my inventory, and inventory is my short-term asset. In balance sheet, if you have a chance to divide your total asset into the two parts, you should definitely divide them into short and long. By dividing them into short and long term, you can cover all of your assets. None of them will be left aside. So, for example, my receivable, considering that I have, let's say 700, just a minute, I have 800, and I am again in a point A. I have agreed with the customer that customer will pay 200 within next 1 year. I mean, within point B and A. From B and C, customer will pay, let's say 400. No, let's say 350, and here is left 250. For the point A, my short-term asset is only 200. And for point A, my long-term asset, I mean long-term receivable, is sum of that figures, which is 600. Why? Because long-term asset is intended to use, to sell, or to convert into the cash more than one accounting period or after one accounting period. Here, I have stayed in point A, and I have an intention to convert that receivable into the cash after 1 year, one accounting period, comparing the point A. That's why the sum of that figures, I mean 600, is my long-term asset. Assume that 1 year passed and we have reached point B. The question is, what is your short and long-term asset? For point B, next year, I expect to receive 350. That is my short-term asset for point B. If I prepare my financial statement at the point B, my long-term asset, 250. That's my long-term asset, long-term receivable. If you have reached to the point C, you have no any long-term asset. Why? Because you are not expecting to receive any cash or to convert into the cash after 1 year any receivable. You do not have any long-term asset, but you have short-term 250 receivable. That is your logic of short-term and long-term asset. For example, the car. Car is my long-term asset. Why? Because I have an intention, or I had an intention to use that car more than one accounting period. It's not necessary whether there is only 1 year left or 2 years left to the end of end of useful life of the car. It depends on your intention. When you were at the point, for example, you are trying to buy a car and your intention to use that asset to that car more than 1 year, one accounting period, your intention allows you to classify that car as an long-term asset. But if you have an intention to sell that car, it's not your long-term asset, it's your inventory. Let's say you are a car seller and you have bought, let's say, several cars, let's say 10 cars, and your intention is not use, your intention to sell that car. In that case, the car will be classified as short-term. Why? Because you have an intention to sell, to convert that items into the cash within next financial year. Additionally, if you have purchased 10 cars, 1 for use and 9 for selling purposes, in that case, 9, which is for selling purposes, is inventory, I mean short-term asset, but the remaining 1 item is your long-term asset. Guys, the name is not necessary. The necessary is your intention. Okay, is that clear? Any question? I'm sure you have a question, but you do not ask. Okay. If you say no, it means no. Let's talk about short-term and long-term liability. Again, guys, we have short-term and long-term. The logic is the same, considering that we are in a point A and we are preparing our financial statement and we have next 3 years. I have a bank liability, let's say 1,200. And I have agreed with the bank. Consider that, guys, there is no any interest tax, interest expense. At the point A, you have agreed and you have taken, you took bank liability, 1,200. And your bank agreement says that you have to pay 200, 300 year 1, I mean within point A and B, and 500, and then we have 400. Here, for point A, your short-term liability is, just a minute, 300. Why? Because short-term liability is the liability that you have to pay within next financial year, at the point when you prepare your financial statement. Your long-term liability is sum of 500 and 400. It gives you 900. Consider that you are at the point B and preparing your financial statements. For point B, what is your short-term and long-term, or sometimes it's called current and non-current liabilities? Your current liability for point B is 500 and your long-term liability is 400. Let's say you have reached point C. Your current liability is 400 and your long-term liability is 0. Why? Because after 1 accounting period, there is no any financial liability. That's it. Any question? No?